Hello everybody, this is the trend scan of the futures markets for the month of June. We are at an important crossroads here with the dollar. This is the dollar, the DX, the US dollar index future. And as you might remember, the DX has flashed a short signal here based on system 1 on the quarterly chart. This was a short signal. Well, the stop basically goes up here, and this wick high is the Corona spike panic bar high from March 2020. So in many markets, this marked a very important turning point. And well, now it looks like we are getting over and above that level. Well, if we look very close, we are already above that level, right? But this is a quarterly, that's a quarterly pattern. And ideally, I'm looking for a quarterly close, bar close above that level. Now this quarter closes in 2 weeks, basically, right? So I would want to wait because this is a quarterly chart. Things don't move that fast. So I want to see how the month of June actually closes. If we at least get a monthly close, well, June is the quarterly close as well. If we get this green bar to close above this wick, well, this would actually mean that this becomes a pattern failure. So the short trade is a failure, and then the target becomes the start of the momentum move that led to the pattern. Now this is the start of the move, and this then becomes the target. So that's quite a big move, right? That's a 30% move. And this would this would actually bring quite a lot of turmoil into the markets, because a strong dollar. I mean, we have seen for a good 2-3 years that the precious metals, for example, are developing really nicely while they were anticipating a weak dollar, basically. Now, if we see the dollar getting strong and strong, especially if we see a couple of big green bars, so a surge in dollar strength, if we see this, well, we'll have a dampening impact on other commodities like precious metals, for example. So I'm having an eye on that. So let's have, well, we can just go into the precious metals. The metals here, gold, for example, despite this dollar strength, we haven't seen a lot of impact, right, on the charts. It's basically going sideways. So this dollar run has not shown yet in the charts. And well, we're still in an uptrend, right? It's basically clustered with long patterns. Back here, this was the long-term buy signal at around 1,400. And we had a couple of other signals. I mean, we had an S1 pattern here, then a turtle pattern here. These are all long patterns. And we have as well slightly broken the all-time high back from 2011, right? And now we're basically lingering a little bit below that important level. So that is adding pressure basically to this important level. And all eyes are now on this level to be broken, right? So should the dollar get weak again? Let's just jump quickly back to the DX chart. Here on the quarterly chart, this could still become a double top, right? And basically re-break, right? And still run lower. Now, if that happens, well, we'll see precious metals go to the moon. Now, if this does not happen, let's just go back here, then we should actually see that, precious metals, either they will go sideways, right, for quite some time. And I mean, they have already gone sideways for a couple of years, right? I mean, this could continue, right? We could see a touch of the 21, or we could even come back and test the midline here, this important line. It could still remain in an uptrend, right? A weak bullish development, but still remain in an uptrend even when the dollar gets stronger. We're just stuck here then in this range, and this could even develop into an overall pattern too. Now let's have a look at crude oil. It's a bit a special case because of the geopolitical events, Russia and Ukraine. The prices have spiked, right? Well, we see it here, right? This was the target level. Well, we've over exceeded that. We already made a stop run above these levels. So we've got a series of big green bars. Well, now the question is, this is the ultimate stop run level, right? if we can get to this level and break it. So how would that look like? Well, we can look at the gasoline charts, the future, and this is how a stop run above the high looks like, right? Well, this is, by the way, this is another S1 pattern here with a nice entry down here, which we have traded. This is this is how it could look like, right? A big stop run move and the consolidation high is broken. Now this could happen with crude, and I mean we've got the crude prices in our head, right? Let's just have a look here. If crude breaks that level, well, we're well above the $150, right, the barrel, and well, this would have an impact on all of us basically. Now let's have a look at natural gas. Natural gas has been in a long downtrend. It's basically the last of those commodities that is joining now or trying to reverse into an uptrend. And we've seen here nice runs, right? I mean, natural gas is famous for these runs, and it's a great trading instrument as well. But it looks like, well, it has run its course for the time being, because it's still here in a reversal, right? We are still in a downtrend. It's reversing. I wouldn't be astonished if we get a deep pullback, even down here to the $5 level, to basically find another bottom, another support from which then a new established uptrend can start. So this might be the first leg, right? What we see here, this might be the first leg in a new uptrend with natural gas. Now let's have a quick look at the interest rates before we come to the US equities, the stock market. Now the interest rate future has dropped quite a bit. Well, that means an increase in yield, right? But we have to look at the quarterly chart as well, especially when we do our trend scan. And that is clearly in an uptrend still, right? This has not reversed yet. We've just made a big move in one direction. It's a bit like natural gas, right? And I wouldn't be surprised if we snap back, especially here when the markets are overextended, while we are far away from the moving averages, and we're sitting here at support. That a snapback might occur, right? And this could bring us here back into this area. And well, this topping formation is not over yet. I mean, I would be surprised if prices would just drop like a stone, right, without any correction and any up and down, a reversal basically. Now let's have a look here at the US equities, at the S&P future, ES. Now the ES has been struggling quite a bit. I mean, we have to put this into frame, right? I mean, we had the Ukraine Russia event, the war starting. Well, that was in February. So February is basically here, right? So in light of that, we don't see much impact actually on US equities. Why is that? Well, I don't know. Maybe there's some money flowing. Money that is fearful, right, in Europe or wherever, that is flowing into the US market because the US is far away from these events. Well, we are consolidating, right, but I don't think this is particularly attributed to the war going over there. We have just run way up, right, and that is just a healthy pullback. By the way, this could still be an S1 pattern. We're currently getting nice red bars. This could even get bigger. We could test here the 200 moving average. That could still come around, right, and trigger an entry signal. Now how deep could it go, right? It's always interesting to look at the chart as well to get an idea. So what are the next support levels or resistance levels on the overall way down? Well, first it's the 200 here on the weekly. That offers a bit of a support, the 50, but it's more like here prior price activity down here at 3,000. And one that comes in earlier is the 21 moving average here on the quarterly chart. So I'm basically more looking now, I'm looking now at the 200 to see how price reacts when it reaches there, and basically as the bears have been able to go below the 8. Well, we have to wait for the quarterly bar close to get a better idea. Well, now we're basically shooting for the 21, right? So going down to the 21, or to this level 3000. So that basically means, yeah, another correction potential of 20% from current levels, right? Although the overall picture is still bullish because we are on a clear uptrend, well, it doesn't mean that there are not great trading opportunities on lower time frames to trade a drop like this, right, towards the 3000 level. So let's see how that goes. In any way, there are interesting times. The asset classes are a bit more diverse, like US equities here are in a pullback. We see how far that goes. Gold, silver, etc. still holds quite well. And the energies, crude, etc., well, they might continue and go quite high, right? With the interest rates, we might see a snapback for a lowering of the yields, and the most interesting is the one we've looked in the beginning, the US dollar index with a very clear level. So let's see how the next 2 weeks how that turns out.